Hi YouTube. Today I'm doing a video with someone who's been watching the channel, someone who is from outside the US, who has US companies, who's done work here, and he has a lot of questions for me. We're gonna have a little conversation. So
Yeah.
Alaatin, thanks for being here, man.
Well, Jim Baker, thank you so much, man. It's so good to finally see you. I've been hearing so much about you. Well, I mean, I started watching your content, I think about a year and a half, and I think I've seen your content way before than that. But because I wasn't thinking about moving to the US at that particular time, I didn't pay too much attention. But when the idea became a reality that I had to move to the US, and I was like, oh, shit, US is pretty notorious for its, tax code and this and that and all that. And I was like, I think I need to educate myself a little bit. So I started watching your content. Well, I watched it for many, many hours, but at the end of the day, I couldn't understand anything. I can't understand this, man. Maybe it's a me thing. I don't know.
Well, it's complicated. There's different forms and there's different applications, and like I was just talking with my other colleague, there's everybody's situation is different.
Right.
So whether you are doing some kind of online business or you want to actually move to the US,
Right.
the questions and what actually applies to you is different. So tell me a little bit about your background, because I've seen that you've done YouTube as well. You're doing real estate, right?
Right. So I used to do real estate back in Turkey. We helped foreigners buy property in Turkey for about 5 years. So I helped the company to build its YouTube channel and online presence.
A lot of
and
Americans
whatever.
doing that, right? For residencies and stuff in Turkey, right?
A lot of
Turkey,
Americans doing
sorry.
it. Yes, Americans are buying properties in Turkey to get citizenship, which we're going to talk about it. By the way, I want to ask you how that works, because I think about becoming an American citizen down the line. It kind of does scare me, the fact that, oh, you got to pay worldwide income and all that. So one of my friends have ended up, structuring it pretty well. But essentially, this is what we used to do back in Turkey, help foreigners buy properties in Turkey, become Turkish citizens. And then, the time came for me and my family to move over here to the US. And now, because we've been in the investor migration industry, I hooked up with Visa Franchise. I was first their client, and now, started working for them. We've been working for
I did
the past 1
I did
hour.
an interview with Patrick a couple months ago on the channel.
Yeah,
So
yeah.
Patrick, the CEO, I guess, or of Visa
He's
Franchise.
the co-founder.
Co-founder, whatever. And yeah, they help a lot of people. If you are interested in moving to the US and you want to buy a franchise to get an E2 visa, they're a great source for that stuff. Yeah.
Thank you. Thank you for that little advertisement.
Yeah.
But Jim, can you please, for someone like me who is, okay, now I know a little bit, right? But
How long have you been here?
been here over a year now.
In Miami?
Yeah.
Cool.
I've been coming and going and been to,
But you like live here now?
cities.
You got a,
yeah,
you got
yeah,
a spot? Yeah.
Been living here since June completely.
Okay.
But, been coming and
So
going.
it's your first year, really?
Yeah, it's my first year.
So what were you going to ask me? Sorry, I cut you off.
No, it's all good. What I was going to ask you is that for someone who generally likes to take a broader view of the world events and current things that we go through, what is this U.S. tax system about? If you were to sort of make sense of it in a couple of sentences, I know it's very hard. How would you describe it?
The U.S. tax system. Well, before we get into U.S. taxes, the U.S. economic system is a system where you can come in here and with nothing and grow a big business. You can lose everything really quickly, and you can also get a lot really quickly. So the U.S. economic system is set up to where there's a lot of freedom of movement. There's not a lot of bureaucracy in setting up companies and bank accounts and really scaling a business and making, really tens of millions of dollars, hundreds of millions of dollars with very little oversight. And then after you make the money, that's when you kind of have to figure out the tax stuff. So it's not, in other countries, the banks and the tax system are really intertwined. In the US, they're kind of two different things. Obviously, the IRS can get information from wherever they want, and they can come after whoever they want. They can get that stuff, but it's not automatic. Where in countries like Mexico or in Canada, they're monitoring the banks and they're really looking through that stuff. So the US is really entrepreneur first, business first, and then it comes out to how you're going to do your taxes. And that's what makes the tax system kind of crazy, because so many people just don't do anything or don't file, and then they get in a ton of trouble eventually.
Okay, so you're saying you got to file your own taxes. This is where things get a little different for me, because I've never heard such a thing as that, I need to file my own taxes.
You tell the IRS what happened, and they either believe you or they believe you and then ask you to prove it. but most of the time they don't ask you to prove it.
They're okay.
They
with
have
it.
some matching systems, but for like if you open a business, you have a business bank account, there's a couple forms they could match up.
Yeah.
But generally they're going to believe you, and if they could audit you. But if they don't audit you, then whatever you file is going to be good, and they have 3 years to audit you.
Oh, so 3 years. So when you come to America, the first 3 years you can basically
No. If you don't file a tax return, they can audit you forever. If you file a tax return, they only have 3 years to come after you and check that information is correct.
If they don't, then that information is irrelevant.
If they don't, they can't audit you. It's 3 to 5 years depending on the inaccuracy. So if you make if you make $10 million and you file a form that says you made 50 grand, then they can audit you forever because that's materially misstated. But if you make 10 million, you file a form that says you made 8.
Yeah.
After 3 years, that other 2 million is lost in the breeze, and they can't audit you for it. I mean, there's obviously different. It's very nuanced, but conceptually, that's it.
So you're saying we basically tell IRS, hey, look, this is what happened. This is how much money I made. This is how much money I spent. This is what is left if it's for business or for personal. And then you say they just got to believe it, or they can come at you. What if you make a mistake? What if you're not that savvy? You're like, oh, okay, I made X amount of money, I hope, from different income sources, but like it's hard to calculate and quantify and all that. What if you make a mistake, or what if you're not really qualified to sort of?
Well, it's your responsibility. Even tax returns I prepare, my clients have to sign, and they're ultimately responsible for them. If you have a job, you get tax forms, and it's easy to file taxes. And there's only really one way to do it. If you have a job, it's really the business owners and the entrepreneurs who have to have proper accounting. And there's a lot of rules and things you're supposed to do and that you have to do. It's just not. You just have the freedom to kind of report what you want. And again, it's not audits aren't super common. Not to say you should do it wrong, but there's a lot of like responsibility to do it. So there's a lot of freedom, a lot of self-responsibility, and a lot of it's just everything moves so quick in the U.S. So if you're coming here as an entrepreneur and want to move to the U.S., that's all your responsibility. You have to pick your own professionals. You have to file every year, and you have to do your own accounting. And the IRS isn't going to participate really at all. They're just going to have certain things that are reported to them.
Yeah. So I came to America. First time I came to New York. Then I did a big circle and came to Florida. But before coming here, I went to Vegas and California. In California, I attended almost like a meeting, almost like a workshop type of thing. There was one, a Chinese gentleman who was talking about, oh, you think, American taxes are high. California taxes, they're no high. I'm like, what do you mean they're no high? There is a way you make that. It's no high taxes. I'm like, and then I was asking to a friend of mine, I was like, what does he mean by California taxes no high? And then he went on to elaborate that I guess there is a way that you structure things in a way that you end up paying, yes, you end up paying taxes, of course, but you don't pay, arm and a leg. How does that work?
Well, taxes are based on how much money you made, less whatever qualified, legitimate expenses you had to make that money. So a good example is if you sell, I always use stupid examples like shoes and hats. Right. But if you sell $10 million of hats and it costs you $9 million to produce it, what you pay tax on is that net $1 million. Okay. And then you can reduce it in other ways. You can contribute to your own charity that you own. You could pay family members. You can buy an office building and then depreciate it. And you can get to a point, and based on loans and debts, so you can structure money and payments to where you actually do pay no taxes. You just have to do it with some foresight and some forethought. But if like your business is super simple, you will have to pay some taxes. Like let's say you do a real estate deal and you make a $10 million commission. There's only so much you can do there, right? If you can invent $1 million of expenses, you're still let's say you still pay tax on $9 million, but that's when like maybe it'd make sense not to live in California, because in Florida or Texas, you're not paying that extra up to 13% state tax, which is a 13% on $10 million is obviously $1.3 million, right?
Yeah.
So yeah, it's a lot of money. It adds up. But did that kind of answer your question?
No, it does kind of answer the question. But also, I think one way the question would go is that, I watch Donald Trump all the time. You guys have this very famous president of yours, Donald Trump. This is so crazy. Americans are so polarized by this man. I mean, I'm not polarized.
Not as much anymore. Now it's not as polarized.
Yeah, but some people like him, some people don't. I have been following the guy for the past, I don't know, for the past 15, 16 years or so. But he always said things like, I don't pay taxes because I'm smart. I don't pay taxes because I'm smart. Now, here comes my question. IRS is probably smarter than everybody because that's their everyday job, right? So if they create the tax code in such a way, that must mean that they are aiming something. What is it that they're aiming? Are they aiming the fact that, okay, you know what? We want the money to turn and circulate as much as possible. Keep the money in your company, keep the money in economy, don't hurt the money. Is that the reason why, tax code has a lot of advantages?
Congress makes the tax law. The president can present things to Congress and they get it through, but the IRS doesn't make the law. The IRS enforces the tax law. So the government, Congress, the legislative branch is what's going to pass the laws. And then the judicial branch, there's three branches of government for non-Americans. We have the executive, president, judicial, the courts, and the legislative, which makes the laws. So the legislative branch is going to make the laws, and the courts are going to enforce the laws. So we have our court. We have the same thing in the tax system that you can take. If the IRS says you owe money, you can take them to court and win. It happens all the time. So if the IRS interprets the tax code in one way, and you say no, you're wrong, you can take them to court and you can win. It happens all the time, and there's a lot of precedent in their court system about this. So in an effort to be fair, the Congress keeps putting laws on top of laws, and it just creates a lot of opportunities for different deductions. And without having done a ton of research in the past, what Trump did is a lot of real estate stuff. And there was a lot of NOLs and passive losses and different kinds of losses he took from certain deals that didn't work out that went against his income. And he had a lot of debt leveraged losses. And it allowed him to just pay no taxes. And he followed the law. He was obviously under heavy scrutiny. He is not for all the stuff they accuse him of, if they would have got him for tax fraud, he would have gotten. That's something they'd put him away for, But for all the other stuff, they whatever. But he's following the laws. The IRS is going to they're looking at him, and the IRS is going to enforce the laws, but they're not making the laws. So it's really looking at what the laws are, looking at the tax code, and seeing and enforcing what it is.
Yeah, I think this is what my understanding is. I mean, correct me if I'm wrong. The way the tax code has been set up, it's being set up to make people spend more money and put it back into the economy. Because one thing governments wouldn't want people to hoard money, to sort of save money and take it out of the economy. They would want the money to circulate as much as possible. The more money circulates, the more taxes that they can charge. Is that the way that the tax code has been set up? Is it what it's aiming to keep the money in the economy?
It's similar in many countries. You have income and then you have expenses. As long as you can justify your spending to be an ordinary and necessary business expense, it's going to lower your income and lower your tax bill. I don't advise clients to go and buy a truck that they don't need to save money on taxes. You're spending $100,000 to save highest tax rate, and if you're no state tax is 37%. So I'm not going to tell you to go buy a truck you don't need, which may be an aggressive tax position to its deductibility to save $37,000. But yes, if you can justify it for business, whatever you spend can be deductible. And I don't know if it's more of a basic principle. You can't, and if you have a corporation and you just use the 21% tax rate, the lower tax rates, there's other taxes if you're just holding it for investments. They'll have accumulated earnings taxes. There's a lot of ancillary taxes that can apply if you don't circulate the money. So I don't know if that kind of helps.
Yeah.
Your question.
I mean, that I definitely understand that. It's really interesting. I mean, from my journey, I can only ask the questions that I want to know and that I have experience of. And the other thing was, okay, when I first wanted to bring some of my money here, right? Because they would scare us outside the U.S. We are shit scared of U.S. tax system, as if oh, you cannot carry cash around. If police catches you with this much cash around, they're gonna question it and this and that. I'm like, oh, okay, so I'm gonna bring my money over here to the U.S. and I was even scared. I'm like, hey, would the IRS ask me where this money is coming from and stuff? And I asked around and a few people, and people said no. So long as it's from your own bank account. In your country, you can bring in as much money as possible. As much money as you can. So what's the sort of stance on that? And can I do it over time as well, which is what I have been doing? Would that be okay?
For sure. The IRS is taxing you on earned income. If you already earned it before you came here, it's not going to be subject to tax here. So just because you send it from an account abroad to a U.S. account doesn't mean you earned it. You might have to, if you get audited, the IRS look at your U.S. accounts, will say, this is money in, show me it's not income. And then you'll say, look, here's my foreign account. It's been in there, and that's where I sent it from. And that's fine. It's not going to be, it's not going to be taxable. So if you're walking around with like $50,000 in cash, you're allowed to. If you try and deposit at the bank, they might ask you what it's for. They just want to make sure you're not doing illegal stuff. And the banks have their own rules with FinCEN and everything about reporting cash transfers. So you could walk around with that money as long as it's not illegal money. You're fine. You can do whatever you want with your stuff.
Okay, so most of that stuff is urban legends.
Well, the short answer is like you're just taxed on money you earn, and it's based on your residency and your tax status. So if you just moved to the U.S. in June, basically anything you earn before June wouldn't be subject to tax. Once you get here off the plane, and that's when your tax residency starts. We can talk. There's a lot of specifics, whatever. But once let's say you moved here in June, you've been here ever since. Everything you earn after that date is subject to tax, and you can get credits if it was earned abroad or whatever. But if it was earned before that and you're just moving it between accounts, it doesn't mean it's taxable.
Wow. All right. Cool. Interesting. The other thing I want to ask about is that U.S. citizens are taxed worldwide.
Yeah.
Right. So we have, I've been working with a lot of investors and people who are moving from, different countries, especially Canadians. Canadians, when they're investing over here to the U.S., mainly to get the E2 visa, I always hear this question. I'm like, okay, we want to invest the money and set up a business, but, am I going to be paying taxes over there, or do I pay taxes over here? Well, how does that double taxation thing work?
Sure. So generally, the U.S. government has tax treaties with many different countries, which the tax treaties define and govern the interpretation of the tax code.
Right.
In general, where the money is earned is where it's subject to tax. So if you buy a rental property in Oregon or Atlanta, Georgia, or in the U.S., it's going to be subject to tax in the U.S. Mm-hmm. Now, with Canadians specifically, there's disconnects between the types of entities you're using. So entities, LLCs in the U.S. are transparent, but in Canada, they're looked at as corps. Right. So if a Canadian, it's really complicated. It's crazy. The retirement plans and the asset types with Canadians are really complicated. But yeah, you need to review any investments in the U.S. with a U.S. tax person and a foreign tax person to make sure there is no double tax. Yeah. And it's mostly based on like the structures and the entities you're using where you can run into problems.
Got it. Would I pay taxes from my worldwide income? Now I'm here. I have a
Now
visa.
that you're here, yeah. Now that you're here, you have to report. I mean, depending on if you're going to be a resident this year, it's based on the substantial presence test. So if you are,
and how long is that?
So the substantial presence test is how you determine if you're a non-citizen, non-green card holder. That's how you determine your residency in the U.S. tax residency. So once you pass or satisfy the substantial presence test, you would be a tax resident unless you meet an exception in the tax treaty or in the 8843 form, I think. And it's 183 days in 1 year. 1/6 of the days from 2 years ago, 1/3 of the days from last year, plus the current year days is over 183. So it comes out to more than 120 days year over year. So if you're in the U.S. every year for 130 days, then you would be you would pass the test technically on the third year.
Okay, so is it what, 6 months?
It's 6 months in 1 year. Year over year, it's 120 days. So 4 months. If you're in the U.S. every year, you can be in the U.S. every year up to 4 months without being a tax resident.
And it doesn't matter if you have a company in Dubai, you're making money over there, but you set up that company, let's say 10 years ago, and the company has been making money ever still. So I need to come pay taxes here?
Well, once you become a U.S. tax resident, you have to disclose that. That's why you would want to count those days.
Disclosing is one thing, but paying taxes of a company that I've been owning for the past 10 years to America.
If you live here, that's your responsibility. That's what the rules are. And it's if you assuming right now you have a company in Dubai, you're paying zero taxes on that. Well, you're paying 9%, right? In Dubai, they charge 9%. So that's not enough for you to not be subject to guilty taxes. So just straight out, if you're a U.S. resident, you make, again, $1 million in a Dubai company, you pay that 9%. There's additional tax to pay in the U.S. Like short answer, without considering any of those, there would be some additional taxes to pay.
Yeah.
And just watch the video and don't be a resident or claim a treaty exception or don't spend any days here. But that's what the rules are. So you can still come here 4 months a year without being a resident. It's pretty good.
Yeah. So this is where
it's the same in Germany. If you go to Germany or France for 8 months or 9 months, you're still going to be a resident there too. It's the same in other countries.
No, it's the same in other countries, of course. So I think that's the reason why one of my friends cannot come to America this year. He goes like he's an American citizen. He lives abroad, and he is subject to what you're exactly talking about. He was telling me stuff like, Alaatin, I need to. I'm exempt from tax up to $126,000, but I've already stayed my days in America. I cannot come to America. I can see you in Mexico. You're in Miami. Why don't we fly over to Mexico? You know, have some fun over there. I'm gonna come next year to America. How does that work?
Well, so what you were talking about is a non-resident spending time in the U.S. That was the last example. So if you're a non-citizen, you can spend up to this many days in the U.S. Now, for my friends who are citizens or green card holders, you have to pay tax like you lived here anyways. Even if you didn't live in the U.S., you have to file worldwide taxation. So your friend is a U.S. citizen, has to file his taxes like I do as a 1040 resident. Now, for people who are living abroad, you can claim a foreign earned income exclusion. It goes up every year for inflation. It was I think it was 120,000 last year. I guess it's 126 now. If you're a bona fide resident of a country, that's one test, and it sounds like he gets around a little bit. He's fine. He's not really in one spot, so he has to pass the physical presence test, and that's 330 days a year. He can't spend more than 30 days in the year to claim that exemption in the U.S.
Oh, so you got to spend less than a month.
Less than a month to claim that. Well, as an American, to claim that exclusion, the full exclusion. I think it gets prorated if you're here some days, but
So I say that I'm an American citizen.
Yeah.
I don't live in America. I live elsewhere, and I make $120,000 per year. I don't pay taxes in America.
you can exclude it from. It depends how you make it. If you make it from if someone just pays you as a consultant to a U.S. bank account, you probably still have to pay payroll taxes unless you have a totalization agreement. So you'd still have to pay 15.3% of payroll taxes on that amount.
Yeah. Okay.
Even though, but you can exclude it from income taxes. Which again, if you're only making 126, you're just a single person, it's like maybe 20% like net effective rate. But when you add in the 15% of payroll taxes, it adds up, right? So there's some ways to get around the payroll taxes, but it's like you have to get a wage or from a foreign company is ideally how you do it, and you can structure it to pay yourself from a foreign company. And you know, is it worth it at that point? It can be, but then you have to deal with local laws of where you're paying yourself from. you have to deal with those laws.
Headache, yeah.
Well, it's annoying, you know, being paying taxes in the U.S. when you don't live here, but it's the rules. That's what we have to deal with.
No, I mean, we'll see. We'll see. It's a little complicated for people who haven't lived here. That's for sure.
Well, you mean for yourself, like someone who's new to the country?
I mean, and it differs from state to state, you know, and it's significant. It is significant. I mean, the amount of taxes that you pay in this country, oh my God, it's crazy. It's too much. You know, you pay what, 37%, 20%? I mean, there's a portion that the government takes from you. That's one thing. There's the portion that insurance companies take from you. I call it as a tax. Most people don't, but I think
like
it
health
is.
Insurance?
Yeah, health insurance. It's another form of tax. And then you pay sales tax every time you go to a restaurant. Everything you buy, you pay extra additional taxes on that. And then, you know, you got your Medicare and Social Security. And then you use credit cards, and the credit cards charge you. By the time when it's all said and done, it's like, what, 60, 70% of the money is gone?
It depends. Well, we can add it up. I mean, if you, let's use the standard $1 million example. If you have $1 million example, $1 million, you live here, let's say you pay up to 37%. There are deductions you're going to claim. There's ways to structure it to lower your effective rate.
Deductions like what? I make $1 million.
You can put it in like the boring example is you can put $150,000 in a retirement account.
Okay.
That's money you still have. It's still yours. You can't access it for many years, but you still have it and you don't pay tax on it. Now you pay tax on it later. You could invest in certain types of companies. You can get a loan and buy a business and then deduct the whole cost of that without paying the loan back. There's a lot of stuff you can play around with and deduct. So there's a lot of opportunity to make money here. You have a lot of control over what taxes you do file. I think taxes are high. I would love lower taxes. I mean, I'm not going to argue with you there. I'm just trying to be optimistic about it.
What do you think Trump's going to do? Is he going to lower?
I think he's going to extend a lot of the things he did with the Tax Cut and Jobs Act. I think he's going to reinitiate those. I don't think he's going to change. I don't think it's a huge focus. I think he's going to just basically extend all the stuff because he set a bunch of new rules that basically expire after 4, 5, 6, 7 years. He'll bring bonus depreciation back. So if I buy a Like if I buy 57 computers, I can expense them all right away instead of having to expense them over 3 years. And that's something I can use for my business. And like maybe at the end of the year right now, maybe my team needs computers, and instead of paying tax on my $1 million, I spend 400 grand on computers or equipment or whatever I need. I deduct it all and I get to use it for the next year, and I pay tax on the net amount when I still have an asset that I'm using for my business. So, and again, the IRS isn't going to, we have to be in charge of our own thing. Hopefully they don't audit us, and that's how we go through it. So yeah, taxes can sure be lower. They could be higher.
How about this exit task?
Exit tax?
I have a lot of friends who gave up their American citizenship because of the high taxes, and they're like,
Sure.
"Oh, shit, I got properties around the world, and I don't want to pay taxes over these things." So they give it up.
Yeah, it's cool. I like it.
Are they now subject to 30%, or what is it?
Well, the problem, I'll explain how it works. In short, it's a deemed disposition of assets. If you made like a couple $1 million and it's all after tax, there's no exit tax.
Right.
But if you bought a bunch of Apple stock in 2000 and you're sitting on, or let's say you bought Bitcoin in 2014 and you're sitting on $10 million of untaxed capital gains, that's what you pay tax on. That's the exit tax. They basically make you pay tax on all the stuff that you haven't paid tax on yet.
Oh,
So it's not like an extra tax on what you're worth. It's just a tax on the gains that you haven't paid tax on yet. So if you have a bunch of houses you bought 30 years ago and they're all worth 80% more, you have to pay tax on that when you leave. That's the tax. It's like a deemed disposition of your assets.
this is interesting.
Yeah, it's similar in Canada. It's similar in other countries. Like they basically don't want you to. They want to stop the guy who has 50 million in Bitcoin gains from just leaving and never paying tax on it. That's the whole
Yeah,
point.
of course.
Yeah.
Of course. But then again, it's making, well, you think this worldwide income tax thing is going to change?
It'd be cool if it did. I think it's a lot to.
Think so.
I think it's a lot to overcome in Congress.
That's pushing a lot of people away from
It'd be cool. I'd
the
leave.
US
I'd go.
and,
Yeah, I'd go live in Panama or something. Yeah.
Yeah. I mean, I don't know. U.S. taxes, especially here in Florida, this is what my understanding is. It's still, it's not as bad as elsewhere.
Depends where you're coming from, but yeah.
Yeah. No, I mean, like, especially like in California, in New York.
Oh, you mean like just the state
Yeah,
taxes?
yeah.
Yeah, sure.
Well,
There's no
not that
state. There's no state income tax. I mean, every state has real estate taxes and
Yeah.
sales taxes. Sales tax is basically the same everywhere. It's 6 to 8%.
Yeah. It kind of makes it hard to own assets in America.
Without retired with assets, yeah.
Yeah, like for example, if you're owning a home in America or owning a bunch of real estate, it's just you got to pay a lot of tax on it. And now because of Florida, you have HOAs, and then you got your property insurance and everything. When everything's said and done, out of the rent money, nothing's left.
Even if you own outright an apartment here, you're still paying $2,000, $2,500 a month just on taxes and fees, just to own something. And there's no mortgage. You already own the whole thing, but you have to pay that every month, or they'll lock you out or seize it. Right?
Yeah.
Yeah, it's crazy.
So this is what I understand. They basically don't want you to own anything.
There's states with lower taxes. Bigger metropolitan areas generally tax more. Like I'm from New Jersey, and my parents had a $300,000 house. They were paying $20,000 of like property taxes a year. Well, maybe those numbers are skewed, but they were paying a lot. They were like
$20,000.
Let's say $15,000 of taxes a year on a $300,000 house. And
How does that make sense?
I mean, New Jersey's not good. They have an exit tax too. The state does. So they'll tax you if you move out of the state. Yeah.
It doesn't even make sense to own your own home then. I mean, you're not owning.
It's tough now.
How come you own a home then?
I hate dealing with landlords. I don't think it was a good financial decision. I mean, I bought a house, but it's a house. The taxes aren't that bad where I'm at, but I just didn't want to deal with landlords, to be honest with you. That's why I did it.
Oh man. So you got the mortgage, and because you got the mortgage, now you got to pay a huge insurance on it.
Yeah, I guess it's not that bad. The having a house out in Texas is different than having a condo. I don't have an HOA. I mean, what do you pay, like $800 a month in like taxes and assessments and stuff, which is still pretty high for out there. I don't want to pay it. I mean, I accept it. There's countries that have taxes. Most countries have some kind of tax and some kind of stuff on property, right? Like
No. I mean, look, I'm not saying nobody else has taxes, and U.S. is the only country that has, of course, everywhere. I mean,
But there's
Canadian
different
taxes and whatever. It's just I'm just trying to understand how it all works, and if I am to conclude my thoughts, I would say that it's a tax system that is very established and that is very deeply rooted, and there are ways to sort of I'm not going to use the word get around, but there are ways to structure it in a way that would benefit the person or benefit
flexible,
the
yeah.
business, and there's a lot of flexibility, and I guess they want to keep the economy going and keep the money circulating, and they're basically telling you, hey, you got to spend this money here, that money here, that could be deductible. You can depreciate this, you can depreciate that, so long as you're not sitting on the money. That's what I understand.
So as far as like the real estate goes, and the whole tax system, like historically, the real estate values have been going up like over time since real estate was real estate, since like the recorded history of real estate has always gone up in value. Yeah, there's dips, but it keeps going up. So if you counteract that with some of the tax stuff, that's maybe that can make you feel better about buying real estate. It's like the worst time in many years to actually own stuff. Like it's much cheaper to rent. But when it comes to like the property ownership, it's pretty good laws and pretty good rules, established laws of like actually owning. Even though the state taxes you, people say you don't own it because they're taxing you, but you have good secure property ownership laws in the U.S. Whereas other countries, like you're getting a lease from the country and it's so it's not a bad spot to diversify if you were like say from Europe or from another country and you wanted to diversify, buying a condo or big house in the U.S. and like having some money there. Except we make our houses out of wood and they fall apart.
Yeah, that's what I realized. I mean, I came over here. It's like, oh, this $1 million property, and not knocking on the wall.
It's made out of wood. There's termites. Yeah, it's crazy. I mean, in Miami, it's better. They make a lot of concrete houses here, but west of here, man, there's a lot of money in the housing industry and the contractors. Yeah.
No, I mean, it's definitely an interesting market. It's definitely an interesting place, and I think everyone should have some sort of a foot here in the U.S. To diversify and everything. And one of the reasons why this country is still attracting people is because of its stability, because of its, the established nature and the business atmosphere of it. Mm-hmm. And I think if, people find someone like you to sort of like help them to navigate and debunk urban myths and legends and to, structure their taxes and business affairs in such a way, I think U.S. could be a great choice.
Yeah, the biggest thing for a lot of my clients is the currency and just getting U.S. clients. We have 350, I don't know how many Americans are. There's about 350 million Americans, and that's people who, and I talk about all the time, 350 million people who can spend money they don't have with the credit card system, which is insane here. So if you want to sell something high ticket to someone, you can sell to an American who can spend money they don't even have. So that you're like completely tripling your entire marketplace. Yeah. And the US dollar is it's the currency that kind of drives it right now. And what I do is I help people from other countries open companies and open bank accounts and do their taxes, do their compliance. It's been more difficult than before. But you can, if you're a foreign person, you're just doing online stuff, internet stuff, you can have companies and bank accounts without paying taxes. And I talk to people every day who are like, oh, how come more people don't talk about this? It's crazy because all I do is talk about it all the time. Yeah. But there's still people finding out today that like they're in Colombia and they can just open an LLC, have a bank account, charge their U.S. clients, charge their foreign clients, and have U.S. dollars and not paying the U.S. income taxes. So
that's crazy.
Yeah.
Talk to me about that. How does that go?
It works pretty simply. The LLC is disregarded for tax purposes. So if I have an LLC, I pay taxes on my income. Personally. Right. So the LLC doesn't pay taxes. There's court cases that are quite old, but they still apply. And that's what I was talking about the judicial branch earlier. But the court cases, the IRS tried to impose tax on this Mexican company that had a radio station. They had U.S. bank accounts. They were getting checks at a hotel in Texas. They had meetings in Texas. And I think they had a U.S. company. And basically, the IRS tried to assess taxes. They took them to court and won. And the court said that just having a random office where you collect your mail, just having U.S. clients and just having U.S. bank accounts doesn't mean you have a U.S. trade or business. Mm-hmm. And that means you don't have to pay taxes. So if you don't have a fixed place of business, which is like a shoe store or a hat store, which I always use my reference, but if you don't have a hat store and you don't have employees, you can have contractors. And if you don't have, and you don't do the work, like if you're flying to the U.S. and installing gutters, terrible example, but that would be subject to tax.
Right.
If you're buying U.S. real estate, that'd be subject to U.S. tax. But for most people, they're doing online consulting, they're doing marketing consulting, they're doing e-commerce, they're doing a lot of IT guys, you know, and you can have U.S. companies and bank accounts, and it's really widely accepted that you won't have to pay income taxes, and the U.S. companies won't withhold taxes on the payments.
That sounds great.
Yeah, it's pretty sweet. Yeah, as I'm jealous of all these clients I'm working with. They're paying no taxes, and
No, I mean, because you're structuring them well. So suppose that we have an e-commerce business, Amazon e-commerce. You know, we sell in the U.S. to U.S. people, but we're not based here. We just have a company here. Do we still pay taxes here?
there's different factors whether you're manufacturing the goods or not. I like to look at most of the client examples like they're a marketing business. Because they're not manufacturing necessarily. They're just connecting buyers and sellers.
Advertisement and sales.
Yeah, they're connecting buyers and sellers. So if you are just connecting the buyers and the sellers, I like it, a marketing business, and you're doing the work from where your computer is, where you live, which is not in the U.S. So it's not sourced in the U.S. Now, there's some complications depending on where you're storing your inventory. I have a lot of clients doing Amazon FBA. Amazon has all the inventory, and it hasn't been challenged. We're still taking the position for most clients that it's no U.S. trade or business, and Amazon's not withholding taxes, and they're not making people sign WADCIs, and it's still working, hasn't really been challenged, and it's still really, there is no U.S. trade or business, and Amazon's their independent company, their own independent agent. They pay tax on their income. So yeah, you still wouldn't have to pay income taxes in that example. In
Here?
the U.S., yeah.
But I don't live in the U.S.
Yeah, you wouldn't have to.
Oh, okay. You wouldn't have to.
You would not have to pay taxes on that in the U.S.
No,
Income taxes.
This is really interesting. I mean, we get a lot of clients who want to move to the U.S. and get the E2 visa, and they want to know about the taxation issue because they sell to the U.S. public here, and they make money that way. And based on what you're saying, most of them are not subject to taxes.
Well, it definitely depends. The E2 visa allows you to come and go, but it doesn't make you a tax resident. So that's based on the days. We talked about the substantial presence test before. So it's how many days they're in the U.S. So many people want the E2 just to freely come and go.
Yeah.
But if every year they're under that 4-month mark, they would likely only pay tax on the income generated by their E2 business, since they have to have employees, and they're going to have real employees doing real payroll with probably some kind of real store. That would they'd pay tax on that.
Of course.
But they could still own, like a lot of Brazilian clients I used to work with had like dental practices or hospitals and whatever they owned abroad. As long as they kept under those days, they would never report or pay tax on any of that other stuff. And then they could open LLCs and consult and play through those LLCs. And as long as they're not related to the other business, it doesn't matter. They wouldn't have to pay taxes. So it's a big consideration on the amount of days they want to spend in the U.S. and to make sure they have different companies for everything they're doing.
Interesting stuff, man. I mean, that's basically all from me for now.
So I had a couple questions about you. How did taxes work in Turkey?
How do taxes work in Turkey? That's a very good question. It's very similar to here. It's not drastically different, but in Turkey, you're being taxed on your expenditure more than
So the higher sales tax of that.
Yes, higher sales tax on certain items, such as cars, for example. Cars are triple, quadruple the price in Turkey. A $30,000 car here would be a $100,000 car.
So there's less Lamborghinis. I saw 45 Lamborghinis yesterday.
Yeah. In Miami?
Yes.
You could see those cars.
I did. I went through Design District and I was like, I was counting. There was a lot. Yeah. I don't know.
A Lambo is a $1 million car.
It's $1 million in Turkey, right?
Yeah.
Yeah.
But here it's what, 300K?
Yeah. I mean, it's still a lot, but yeah.
It's still a lot, but not $1 million, right?
And you can rent them out here pretty easy too. So.
Yeah. So this is how we used to calculate. You buy one car for yourself and 2 cars for the government in the form of taxes, because the taxes are like what, 200 to 300% or something like that.
Well, on cars specifically. So you see a lot of mopeds and bikes out there, right?
Not necessarily. People spend money on cars. Cars are in an asset status in Turkey. That's very interesting because we don't have a lot of ownership costs of the cars. Car values tend to go up, or they tend to hold value. It's interesting. It's not like the U.S. here,
where you instantly lose value coming off a lot. Yeah.
Yes. In Turkey, a car is an asset. It's strange, but it is. Therefore, people say, okay, I'm gonna have to make an investment now. I cannot afford a house, but I can afford a car. Okay, let me buy the car, because car is an investment.
Well, there's also different like you can't get loans as easy as you can. You could walk into a.
Yeah.
Is it? I don't know. I'm asking.
It is. You can get loans when the government allows you to get loans, right?
Oh.
Right now, interest rates are 55%. Good luck getting a loan.
Yeah,
55%.
they'd love to give you a loan. Yeah, you take it. Take a loan.
Yeah, take a loan. 55% or 50%. Go and take it. When they lower it to 18 or 20%, which is the usual.
Well, here you get. I mean, you can go out right now and you have a pay stub. You can get an $80,000 car with an 8% loan, and
yeah.
I mean, you'll be underwater pretty soon, but
yeah, that's what I realized when I first came in here. I took a loan at 23% interest. 23%
pretty
interest
bad.
rate. Yeah.
That's like credit card rate loans. You might as well just use your credit card to buy something.
Yeah, I didn't have the credit card back then.
Yeah.
I got a car loan. Somebody told me, "Oh, you need to build up credit." I'm like, "Okay, don't buy the car cash." I could afford the car cash, but they said, "Get a loan." I paid for 6 months, and 6 months later, you can just...
You calculate how much that loan costs you, right?
Yeah, which is okay. I'm like, okay, this is going to kickstart my credit score. Fine, I'll do it.
The credit game is pretty crazy in the U.S. It's one of a kind. It's one of a kind out here. There's people I talk to all the time whose like whole business is how to get the best credit card. I talked to a guy last week. He's a German guy.
There are whole
How do I
YouTube
get the best
channels.
credit card?
Yeah, there are whole YouTube channels about it. Everything in this country, James, let me tell you, from insurance to which credit card to choose, which state to live, all the regulations upon regulation, layers upon layers of information and rules and regulations on different domains where you cannot proceed without an agent, or you got to know your stuff really, really well. And how long does it take you to get to know it really, really well? I don't know. Maybe a couple
insurance
years.
is the worst. I was licensed agent. I didn't sell one policy.
Insurance is, I hate it big time. I don't know who they employ, those people on the phone. It's so crazy. I don't even want to talk about it. The health insurance, this is what I learned. You got to work with an agent, a good agent, stick to the agent, do what they say, and that's it.
Yeah.
If you're coming to this country, don't try to, I can save money here, I can save money there. No. First couple of years, don't try to do anything.
I went for like 5 years without any health insurance. I was lucky. I didn't get sick. I mean, it's fine. Didn't break any bones. And I'd probably say, like I was telling my parents, like, oh, you guys are suckers paying for health insurance.
Yeah.
I mean, I have it now because I figured it went long enough without any major injury.
Are you married?
Yeah. The whole
kids?
family. We were the whole family uninsured for like 5 or 6 years.
Oh.
So, which is like, I'm like $3,000 a month over 5 years. That adds up.
That's a
Did
lot
I invest
of money.
anything? I don't know, but like now I'm paying for it because it's been long enough, and I figure like I'm due for something bad to fall down the stairs and break a hip or something. So I don't want to push my luck, but I did like 5 or 6 years without insurance because I didn't want to pay for it because I hate it too.
Yeah,
it's painful.
So crazy.
It's crazy.
So crazy.
So yeah, I mean, we have good doctors out here. There's good medicine. I'd rather pay someone what they're worth. Like when I'd go to even if I have insurance, I just do self pay whenever I can. I say, what do I got to pay you? I'll pay you for it. That's fine, but I don't want to just like the industry. We don't have to make this about insurance.
So could it be cheaper to pay out of pocket?
Well, they have it's cheaper to pay out of pocket for like professionals and stuff sometimes. It's not, well, if you don't have insurance, it depends what you're doing. What's not cheaper is if you get like a life-threatening illness and you have to go to the hospital for 2 months.
Like a cancer or something.
Yeah, if you break a leg, it's a $30,000 day in the hospital. It's crazy. I mean, I know a couple of guys who are licensed to do medicine in Mexico who live in Houston who I think I could pay them to come over and do it.
Yeah.
Under the table.
No. Don't get into that.
They're doctor, yeah, whatever. Yeah. But the healthcare it's a little messy out here. We have good healthcare services, I think, and a lot of variety, but the whole system is a disaster. So
yeah.
that's a negative with the U.S.
No, U.S. is a pretty solid country in terms of institutions. But because those institutions are pretty solid and they have been running for many, many decades or many, many centuries now, there are so many layers of information one needs to understand and one needs to process at every little thing. And I think it's a big time dilemma. I think it makes people smarter and people read here more. They read more, they know about their stuffs more. Do they act on it? I don't know. How many people know what goes into their food? I don't know. But certainly people know about credit card plans and this and that.
Well, you
It's an
ask,
interesting country.
every
for
time
sure.
I got to buy a TV, I know all about different sizes and models and types of technology in the back of a TV because I just think that like educating myself before buying stuff is fun. It's interesting. It's a waste of time for sure.
Absolutely.
I do watch. There's an overload of information.
Yes.
Like just in general, the world right now. But in the U.S., there's also an overload of experts, and everyone's an expert. Everyone's an entrepreneur
Everyone's
in their
an
own way.
expert, an entrepreneur. Entrepreneur is something. Everyone's an entrepreneur. I don't understand.
Everyone's
this.
an entrepreneur, yeah. Like, what do you do? I'm an entrepreneur. Okay, good. That's great.
Series A, seed investment, this, that, the other. I'm like, oh, okay, man. So many entrepreneurs. It's really interesting, and most of those entrepreneurs hang out here in Brickell. I don't know why.
Yeah, they're doing something. They're helping with something. If you are a foreign entrepreneur and you want to open a U.S. company and bank account, you can definitely contact me and the team because that's what we do, and we help people with the addresses, with the bank accounts, with the tax filings, and we love the chance to talk to you. You can schedule a free call at jamesbakercpa.com/schedule and be happy to help you out. I think we have to do another video.
Yeah,
Alaatin,
man.
thanks for being here, man. I really
Thanks.
appreciate this conversation. It was fun.
Man, dream come true, man. I've been watching your stuff. Now you're here right in front of me. I really like it.
Yeah.
And I'm just, looking forward to doing more of these.
Great conversation. I'm going to do more at this podcast studio out here. So if you are an influencer, you do YouTube stuff too, let me know when you're coming out. We'll set something up. Have a conversation.